Hey everyone, and welcome to The Explainer. Today, we're getting into something that absolutely transforms how businesses handle their money. We're going to demystify the blueprint of a zero-touch financial ERP system. We're literally going to break down the exact architecture behind automated accounts receivable, taking it from a manual headache to a seamlessly automated engine. Let's dive right in. I want you to start by asking yourself this exact question: where is the missing money? Seriously, if you've ever worked in finance or managed a business, you know exactly what I mean. You've likely spent agonizing hours, sometimes days, trying to track down cash from some untracked adjustment or figuring out where a random overpayment actually belongs. It's incredibly frustrating, right? It feels like looking for a needle in a haystack, and meanwhile, your cash flow is just sitting there in limbo. So here is our roadmap for today. We'll start with 1, the manual accounting mess, then 2, designing zero-touch architecture, 3, the core system modules, 4, smart features in action, 5, the 3-phase implementation roadmap, and finally, 6, the automated finance future. Let's kick things off with Section 1, the manual accounting mess. Look, in traditional systems, manual allocation is just a daily nightmare. Matching a lump sum or advance payment against multiple pending invoices, that literally takes hours of dedicated time. Then you've got untracked adjustments. Debit and credit notes for things like discounts or returns often just get completely missed in the final outstanding balances, and that leads directly to silent revenue leakage. Plus, management has absolutely zero live visibility. If they want a party-wise dashboard, they have to ask the accounts team to stop whatever they're doing and manually compile a report. And honestly, the most fragile part of a manual system is, well, us. Human error. In a traditional setup, a single spelling mistake, just one typographical error in a party name or a payment type, can completely corrupt the entire ledger. It breaks the formulas, it fragments the data, and suddenly your accounts team is spending half their week playing detective just because someone accidentally hit the wrong key. Which brings us to Section 2, designing zero-touch architecture. So the crucial point is how we actually build this. Our proposed solution acts as a Tally-equivalent automated backend, but built on modern cloud architecture. At the foundation, we use Cloud Sheets. This serves as a highly robust relational database backend. It holds the data securely and runs all the complex array formulas. Then we pair that with AppSheet. That acts as a dynamic mobile and web app controller that we integrate in the second phase of the build. Basically, you get the rock-solid stability of a relational database combined with the dynamic, on-the-go accessibility of a modern app. Moving right along to Section 3, the core system modules. Think of this like a mechanical blueprint. We have 4 specialized modules working in perfect harmony. First up is the Invoice Master, which automatically tracks all dispatched orders and billed amounts. Next is the Collection Ledger, acting as your centralized repository for every single incoming payment, whether it's in advance, against a bill, or just on account. Third, the DRCR Register. This is a strict validation-controlled ledger for recording sales returns, discounts, and penalties. And finally, Client Accounts. This is the absolute brain of the system. It takes data from the other 3 modules to auto-calculate opening balances, net invoiced, and total received, and it instantly categorizes the final amount into pending or advance. Let's see how this actually works in Section 4, Smart Features in Action. One of the most powerful features here is automated FIFO Clearing. FIFO stands for first in, first out. In this architecture, it's an automated clearing method, where the system looks at incoming payments and automatically closes the oldest pending bills first, without a human ever having to click a button or match a cell. Let's put that into perspective with a real-world scenario. Imagine a client owes you a total of 75,000 rupees across several older invoices. They send you a lump sum payment of 50,000 rupees. In a traditional system, you're in there manually allocating that 50,000 against specific line items. But here, the system instantly absorbs that 50,000 rupees, completely clears the oldest bills that add up to that amount, and automatically carries the remaining 25,000 rupee balance forward. It is instant and it is flawless. And it builds from there. Look at how seamlessly it handles the tricky stuff. Step 1, any overpayments or on-account receipts are automatically flagged as advances. That completely eliminates those missing money queries we talked about earlier. Step 2, dynamic debit and credit adjustments. If you issue a credit note, the system automatically reduces the client's pending amount safely. What's crucial here is that it does this without altering the original tax invoice, meaning you remain 100% audit compliant. And Step 3, strict dropdowns and data validation are enforced across the board. This ensures zero spelling mistakes and completely error-proof inputs from every department. Okay, let's talk deployment in Section 5, the three-phase implementation roadmap. You might think an ERP module like this would take months to set up, right? Actually, no way. Let's look at this rapid 7-day sprint. Phase 1 happens in days 1 through 3. This is the deployment of the core backend, setting up those master sheets, transaction ledgers, and configuring the dynamic array formulas. Phase 2 takes days 4 and 5. This is data migration, loading in your opening balances, and conducting user acceptance testing. Finally, Phase 3, on days 6 and 7, we deploy the AppSheet front-end controller for seamless mobile access and conduct team training. Literally, in just 1 week, you transition from manual chaos to automated clarity. Which brings us to our final stop, Section 6, the automated finance future. This number right here, this is the real game changer. By implementing this architecture, your finance team will save an incredible 90% of the time they currently spend on manual reconciliation. Let that sink in for a second. 90% of that agonizing matching, searching, and data entry is just gone, handled silently and perfectly by the architecture. When you eliminate that manual workload, the expected outputs are absolutely transformational for a business. You now have a live, error-free dashboard that management can access 24/7 without asking anyone to compile a report. Because accounts are perfectly up to date, you can execute faster follow-ups, resulting in faster collection cycles. And faster collections directly mean improved, much healthier cash flow. All of this is unlocked simply by achieving zero manual reconciliation. So I want to leave you with this final thought. We've seen how elegant and fast a zero-touch architecture can be. If your dashboard isn't live 24/7 right now, how much is manual reconciliation really costing your business? How much revenue is leaking, and how much cash flow is just stalled out there? It's a massive question, and hopefully this explainer has given you the exact blueprint to fix it. Thanks so much for joining me today, and I highly encourage you to rethink your own financial architecture.